What's up everybody? Welcome to the Stocks channel. Today we see Bitcoin continuing to make a crash landing after the sell the news events from the ETFs, and it looks like the stock market indices are preparing to push for brand new all-time highs. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So like I said in the introduction, Bitcoin is coming down because of those ETFs, and that's a typical sell the news event. So just a very quick reminder, when something is known and we have a good idea that something is going to happen in the future, the market is going to price that in ahead of time. And then once the news is official, you are typically going to get a sell the news event. You're going to see that same thing around earnings as well, and earnings are right around the corner, so it's important you learn that concept now. Now I'll talk more about Bitcoin when we get to Bitcoin later in the episode, but first up, looking at SPY, it does look like we're getting very close to pushing to that brand new all-time high that I've been telling you about, which is going to be that push above 480. Now, one thing to understand around this push to brand new all-time highs is that it could start to turn into something a little more explosive, which is called a blow-off top, because we are getting a lot of bears that are getting overly bearish on the market yet again, and we did see this last year around January as well. And there's just a lot of bearish narratives going around that are causing a lot of people to doubt every single bull trend and every single bull breakout. And when you get a market like that just continues to doubt the bull market, that actually strengthens the bull market, and that makes the bull market go much higher than anybody anticipated. So it's very important, if you signed up for this game and you signed up for trading the stock market, it's very important that you check all of your bias and emotions at the door and you learn how to follow price action and stay disciplined and unbiased. The reason I tell you that is because if you go back and study market history and you look in the late 90s, that without a doubt was a stock market bubble, and that bubble lasted for 3 years before it eventually crashed down into a 3-year long bear market. And while I'm not telling you that is exactly what's going to happen this time, it is a possibility you need to be aware of. So I'm not going to go into a big lesson or lecture tonight, but it is something I want to constantly remind you, is that these are bullish looking charts that look like they want to go higher, and there's still people out there calling for crashes in bear markets and trying to scare the hell out of you. Remember, just the other night I told you as a retailer you should be moving like water, which means if we start to break down and we break below these risk levels, you can simply hit one button and you can liquidate your entire portfolio without any harm and no foul. Yes, you might take a small loss on any of your trades that you had open, but you can immediately get risk off, and there's even ways to short the market if we do indeed get into a bear trend. But right now, this is not the time. These are bull trends, and these are bull trends that look like they want to go higher. So do your best to block out all of that noise and focus on the chart. So I'm going to continue to say that SPY above 475 is going to push into the 480s at that brand new all-time high, and that's also above the rising 20 daily moving average, so you can also use that as a risk level as well, but they're only about $1 or $2 apart. Below the 20 daily moving average, we come back down towards 467, and as long as we hold above 467, this is still a bull market trying to push higher. It is only if we break down below 467 that we could possibly say something else is happening. So we're managing our risk in the 470s. We have a risk off level all the way down here at 467. And in the short term, it looks like we're pushing higher into the 480s. As you can see, we have the bull trend, and the price action today did break yesterday's high, and that was another 52-week intraday high as well. So there is really nothing bearish on the chart that we have at this point in time. And going into next week, it will be a shortened week because of the holiday on Monday, which means we're only going to have 4 trading days, which can really start to emphasize some major moves in the market with the shorter trading week. So make your trade plan now around these critical levels and understand the trend is your friend until the end. And right now the trend is still incredibly bullish. On the NASDAQ 100 triple Qs, we were up 0.05% today, so we went absolutely nowhere, but we still have the bull trend with the price action above the critical risk level at 404. As long as we're above 404, I think it's very likely that we're going to continue to push higher, and I do think we're going to reach into the 420s, but we obviously have that resistance level right there we need to watch at 414. So above 404, I think we're going into the 420s, and below 404, we're coming back down to test this very critical support at 396, which as you can see is also going to be that rising 50 EMA. So as I said, you are moving like water, which means above 404 you're long, and below 404 you can get risk off, and that is as simple as just hitting a button. So let the price action do all the talking from here and do not have a bias. If we continue to push higher, this trend can continue to push to new heights way beyond the arrow that I'm drawing, but I don't want to get anybody overly excited or overly pumped up. Right now we're taking this day by day and following the price action, and the next upside levels will be 414 and 420. On the Dow Jones, we were down 0.33% today, and we continue to push to new all-time highs intraday, but we are getting rejections as we reach those new heights, and we're still closing above this rising 20 daily moving average. So in the Dow, stay bullish above 375, and if we break below 375, there is a good chance we're coming back down towards 370. We're getting this Bollinger Band squeeze, and I expect this squeeze to fire next week, and it is going to be a shorter week, and I expect that to push us into the 380s as long as we can hold above 375. On the Russell 2000 IWM ETF, we were down 0.17% today, and intraday we did push towards that resistance at 198 and the gap fill just below 199. But once again, we're getting sellers and we're still closing below a negative 5 EMA, so it does look likely that we could be coming down towards 189 before we push higher. Now the small caps are finally in a bull trend and they're going to remain in a bull trend above 189, but if we break below 189, just get more risk off because we could be coming back down into the low 180s. So very simple on IWM, you're bullish above 189 and you can start to look to get more risk off below. And if we start to bounce from this support zone, I'm looking for a push towards 198.44 to close the gap and then 203. And if we could break through all of that, we're likely pushing higher towards 213 in the 220s. On the ARKK ETF, we were down 1.66% today with ARKK closing down below this support at the 50 EMA, which is that close below 47.5, which means we can start pushing lower towards the next support at 46 and then down here right around 44. However, we are still near the 50 EMA and we're only one day below it, so if we start to bounce immediately, we could still push higher and this could be the support as we push higher towards 51. On the VIX, we were up 2.09% today, and the VIX is still very low, and the VIX is still trending lower, so it does look like fear is still leaving the market, but at any point that can change, and at any point the VIX can start to spike. I'm only going to expect a volatile sell-off and high volume panicking if the VIX can break this high at 14, and there's no reason to believe it will unless we see it, and there's going to be plenty of time to react at the critical risk levels that I gave you in the indexes. On Bitcoin, we're currently down nearly 6.5%, and Bitcoin is doing exactly what I warned you about, which was a high volume flash crash event around the ETF approval news because it's just a simple sell the news event. And you have to remember in the crypto world, these traders get overly leveraged and they're very easy to liquidate, which does cause these flash crashes as everybody's stop losses are triggered. So in Bitcoin, while we are below that price target, I told you there was a good chance we can get a flash crash all the way back down to 38,000. And based on the price action and the high volume selling, it looks like that is what's happening and there's no reason for me to change my prediction now. However, if we come down to the 50 EMA and find support right around 42,000, that is a risk level you could look to take on risk, and then again down here right around 40,500. In my opinion, we're going to liquidate everybody trying to buy Bitcoin until we get to 38,000 or lower, but obviously I could be incorrect, but I've been around long enough to see this happen multiple times, and it's a very predictable event once you understand what you're looking for, so I'm still going to heed caution here and tell you we could be going a lot lower. Now, with that being said, in the longer term, I am a Bitcoin bull, and I do believe Bitcoin will go to brand new all-time highs, especially by the year 2025. So if you are truly a long-term holder and you are not going to panic, it really doesn't matter where you buy as long as you hold it until we get to higher prices, you're still going to make profits. Obviously, nothing is a guarantee, and just because I think we're going higher in 2025 doesn't mean that we will. But I do believe with the approval of these ETFs, that is going to bring in a lot of cash flow into Bitcoin, and it is a longer term bullish story. But you have to remember we're traders, and in the short term, I do believe it's bearish, and I do believe we're going lower. So take all of that information and decide what information I just said is right for you, and develop a plan around how you're going to trade Bitcoin or accumulate it for the long term. So in the short term, I think you just need to be risk off below 44,500 because of that risk for the flash crash. And if we do get down to my price target at 38,000, I'm looking to start buying down there, even though I do believe we could go even lower, all the way back down to the rising 200 daily moving average, which is currently at 33,000. On Nvidia stock, we were down 0.2% today, and Nvidia is still hanging around my price target at 550. And as I've said many times, I believe Nvidia is going to 600, but 550 is going to be a hurdle it needs to break through, and there's a good chance we consolidate below 550 before we push higher. If we do push through 550, the next price target is 563, and if we reject from 550, you're looking for support right around 532 and this rising 5 EMA, which is going to be in the 540s. So anywhere between 532 and 550 is a consolidation, and I think we're more likely going to build out a bull flag and continue pushing higher because a lot of people are still very bearish on this stock, even though it's an incredibly bullish chart. On Tesla stock, we were down 3.67% today as we did gap down below the lower Bollinger Band, and we did fill the gap yesterday, but today we left another gap open that is now an upside price target at 225.37. Now there is another gap up here that I missed, which is a gap up here at 231.29. So I do think with Tesla hitting my downside targets, it's very possible we are going to get a bounce soon, and the bounce would likely come from this support right around 214 to 215. And no, I don't think we have to go down there, but that's a support I would be paying attention to. And from there, I would be looking for a push higher towards 225 and then 231. Now, after that bounce, it is possible we continue lower and continue to even lower prices. But in the short term, I think this is just going to be a simple dead cat bounce trade that you can buy and use this risk level down here right around 214. If we continue lower, the next support I have is down here right around 207 to 208 and then 197 below that. On Apple stock, we were up 0.18% today, and Apple is continuing to hold above the 5 EMA and that breakout above 185, with the upside resistance levels above at 188, just below 190, and that gap fill just below 192. I think we're going higher to at least put in a lower high, but it's likely we're going to break out. And I think we will exceed my price target, especially because we have earnings coming up in very early in February, and there's likely going to be some buying pressure as we push closer and closer to earnings. If we do break down, the risk off level that I have for you is below 180, because below 180, we're breaking down below the 200 daily moving average, and we could be entering a much weaker market in Apple stock, but right now we're still above it, and we're likely trending higher. So jumping back over to the S&P 500, hopefully that Bitcoin sell-off news was not a surprise, because I did caution about it before it happened, so hopefully that at least helped a few of you. And it's very important as earnings come up that you understand the sell the news events are very likely around earnings season as well. Do not fall for the traps and the hype. Anytime you see widespread news, it's not that everybody is just going to pile into these things and make money. If trading was that easy, everybody would be a profitable trader, and as we all know, trading is difficult and a lot of people are not profitable traders. That's why I try to teach you good habits around following price action and being unbiased, because it's usually when you start getting emotional about your trades and you over leverage or you go against the trend or what the chart is saying, that is when you're going to suffer those big losses that wipe you out and keep you from being a profitable trader. Get into the disciplined approach and understanding that trading is not easy and you need to have a very disciplined strategy. And then you will really start to understand how trading works, and you will start to become profitable, and then you're going to enjoy trading and you're going to understand a lot more about trading. We are absolutely crushing this market this year already on bank trade alerts, and I do believe this is going to be one of our best trading years yet. So if you want to come crush the market with us, come join us over at Bank Trade Alerts, where you'll get all of your buy and sell alerts for the TQQQ and the SQQQ via email and text message. You can find out how to join Bank Trade Alerts by clicking on the link in the description of this video. If you want access to all of my intraday updates and analysis, then you need to come join us over in the Stock Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. Enjoy the long 3-day holiday, as Monday the market will be closed. And as always, I will see you in the next episode.